Good afternoon, everybody. Welcome to this webinar on IR35, hosted specifically for our Giant Finance Plus clients. My name's Dan Haslam. I'm Group Sales Director here at Giant. We're just going to wait a minute or so just to check everyone who's wanting to attend is in and participating. So I'm just going to wait 30 seconds before I start on the slides. Still got a few people joining, so just wait a couple more seconds and see how the numbers level out. Okay, well, I think we'll look to get started. I think first of all, if I could just hand over to Holly, our marketing manager, she'll just talk through how to submit any questions that you might have as we go through the webinar. Holly, over to you.
Thanks, Dan. So hi everyone. If you did want to ask a question at any time, you can use the Q&A button at the bottom of your screen. Alternatively, you should have a raise hand button. So if you do that, then I can open up your mic and we can just allow you to ask a question. We're just trying to have a more interactive session today. Thank you.
Thanks, Holly. So I thought the best way to sort of run today is for me to go through and present through a few slides. So I'm going to talk today across these points. Bear with me. So a quick recap for everybody in terms of the changes that are being made and what that means from a process perspective. That's important. And then I want to focus on the risk and how the risk is changing, because if you understand how the risk is moving under this legislation change, then you'll then start to understand some of the behaviours and outcomes. So we'll then go on to have a look at how we are seeing the end hirers react, contractors and also recruiters like yourself, and I'll share some of my observations with you. We'll then move on to talk about payroll options. So what the variety of options are available. So that's not just a Giant offering, but generally speaking, what's out there in the market. But then also have a look at the sort of what I would call the good, the bad and the ugly of the payroll world. Because I think that's an important consideration here around supply chain compliance. And then my last slide is a quick overview of what we would see as the bones, if you will, of an IR35 operational plan to make sure you guys are all set and ready for implementation on April the 6th next year. So as Holly said, if you can be submitting Q&As as you go, then I'll be happy to pick up those questions at the end, or feel free at the end to raise your hand and we can add you onto the call and you can ask your question live, and it'd be great to get some interaction with some of you that have taken the time to attend this afternoon. So without further ado, let's move on. So clearly you're all clients of Giants already, which is fantastic. 30 years experience in the market. We payroll, roughly speaking, about 30,000 contractors a week. Part of that is our GF Plus business, and then obviously we've got the other parts of the business as well. We're now up to £500 million turnover, whole range of different services, and a whole range of clients, right the way from sort of the largest MSP providers out there down to new start recruitment businesses, public sector, as well as private sector end client relationships as well. So it gives us a unique position in the market to have a good overview of how businesses react to legislation changes. And I wanted to try and share some of that analysis or observations with you guys today. So if we start with the boring bit, but it's important, which is the process. And just a very, very quick high-level recap of IR35 and the changes. So before we can understand what's changing, we need to understand what the current rules are. So in a nutshell, the current rules are that it is a contractor's responsibility to determine their IR35 status. If they're inside IR35 or caught by IR35, then they should be paying tax like an employee. And if they're outside of IR35, then they're okay to work through a limited company and take dividends. So at the moment, it's the contractor's responsibility, as long as the hirer isn't a public sector body. The proposed changes came into effect for public sector clients back in 2017. So it's the contractor's decision on status. It's also the contractor's risk. So if the contractor decides to pay themselves through a limited company, operating outside IR35, paying themselves dividends and taking home a net pay of around about 85%, if HMRC were to come along and argue with them that they thought they were operating incorrectly and are actually caught by IR35, then it's the contractor's risk. Okay, so currently the rules are in the private. If a client's a private sector client, contractor makes their IR35 determination themselves, and it's them that has the risk. Now, what HMRC decided to do back in 2017 was change that where the hirer was a public body, and now the proposal is where the hirer is a private sector company. They're going to make the changes so both the public sector and the private sector are aligned. And the key differences that are being, or the reason that it's being made is because in HMRC's view, 90% of people that operate as a contractor through a limited company should actually be employees, and they're actually avoiding tax in HMRC's view, and it's costing a lot of money. I think, in fact, Rishi Sunak, the Chancellor, came out just a couple of weeks ago estimating that just the postponement of IR35 from March this year to April next year is probably costing the region of about £750 million in unpaid tax. So clearly, their view is there's a huge amount of money here that they can catch. And what they've established is the easiest way to add rigor into the market and get people to change the view is actually to change where the risk sits. So the proposal is, moving forward, it's not the contractor who would make the determination on the IR35, it's actually the end hirer that has to make that determination. So they have to assess whether or not the contractor looks like a contractor in business or as a disguised employee. Once the hirer has made that decision, they've then got a responsibility to pass that down through the supply chain, and they need to give it to the next agency that's in that supply chain and pass the decision down. And that decision also has to have reasons with it. So you can't just simply say this, we think the person's in or we think the person's out. There has to be a rationale as to how the hirer arrived at that decision. And that is done via something called a status determination statement, or SDS for short. The obligation is on the hirer to pass that down to the worker and pass it down to the agency as well. And the reason for that being added into the process is some of the feedback from 2017 in the public sector was a lot of contractors struggled to get the information that they needed. They got the decision very last minute and never had a real rationale around how the hirer had arrived at that decision. So that's the reason this SDS statement has come about. From the minute that decision is then given by the hirer, that starts the clock ticking on a 45-day right of appeal. And that right of appeal is available to whoever the fee payer is. That's the person who's paying the limited company, which more often than not will be the recruitment business like you guys, and also the worker. So the worker's also got a right to appeal as well. I've yet to see any evidence or examples of a hirer overturning that decision on the basis of an appeal being made. That's not to say it's not happened, but in our view, in my observations, it's pretty much window dressing, in my opinion, to allow the contractor some say in this process, but there's no obligation on the hirer to change their decision. So that's the process. Hirer makes the decision now, has to pass it down to the worker and the fee and the agency. And then there's this 45-day right of appeal. One important point to note is this point in the bottom right-hand corner, that these rule changes only apply if the hirer is classified as a medium or a large business. Okay, if the hirer is classified as a small company, and to be a small company, you have to meet 2 out of these 3 tests. So the hirer has to have a turnover of less than 10.2 million, balance sheet of less than 5.1, or less than 50 employees. And if they can tick 2 out of those 3 tests, they're deemed as a small company. Now, just to be really clear, that does not mean that IR35 doesn't apply to small companies. It absolutely does. but it's just this, the new rules don't apply, the old regime applies, i.e. if the hirer is a small company, then it is still the contractor's responsibility to determine their status, and it's the contractor that carries the risk. Okay, so really important that you're looking at the financial information on company's house for your hirers, taking a view whether or not they would be deemed as a small company, and if so, then you've got a little less work to do. HMRC have come out and given a lot more guidance around timings on this, because often questions around, well, how often do we need to check? So I'd always direct you to have a look at HMRC's website. But generally speaking, if the company is a small company based on the filed accounts, then you can apply the old regime. But if they're now moving in to satisfy one of those criteria on a new set of accounts, then for the next trading period, you need to apply the new rules because this business is now a medium-sized company. So I mentioned at the beginning, I talk a little bit about risk, because if you understand risk and how that's moved, then you'll start to understand some of the behaviours. So you'll remember what I said was that previously it's the contractor's risk. Yeah, so they make their decision, and if they are found to be working inside IR35 when they've been operating as outside, then it's those guys that have the backdated tax risk. Under the proposed rule changes, that risk has shifted now, and the risk for any unpaid tax, if HMRC were to come along and view this contractor as operating incorrectly, the risk now sits with the business that pays that contractor's limited company, and that's referred to as the fee payer. So in my supply chain diagram here, you can see we've got a hirer at the top, we have a recruiter underneath, and then we have another business in the middle, which could be Giant, for example, because we offer this service, where they are the fee payer, and they're the ones that then ultimately pay the money down to the limited company, the PSC, Personal Service Company. So in this diagram, it's the fee payer that has risk. Okay, so if the hirer passes down a determination that's found to be incorrect, then potentially the fee payer has the tax risk. The risk can also move through the supply chain under debt transfer rules. So you can see my arrows there moving back up towards the hirer. So you need to be aware that the risk can actually move from the fee payer and up for a number of different reasons. The first reason that the risk could transfer from the fee payer is if the hirer failed to make a determination in the first place. So if the hirer didn't make a determination and took reasonable care around making that assessment, then they automatically would become the fee payer and they would have the risk. Because clearly it would be unfair to hold someone else accountable in the supply chain if the hirer never made a determination in the first place. The other reason that, or the other reason why risk can move up the supply chain is if the hirer or anyone in that supply chain fails to pass the decision down to the next party in the supply chain. So if in my example here, let's say the recruiter failed to pass the hirer's determination down to the fee payer, then the risk would sit with the agency, because again, unreasonable to expect a fee payer to deduct taxes due if they've not been told that the hirer has deemed this person as inside IR35. The final way that risk can move back up the supply chain is if the fee payer fails to deduct the correct level of tax. So that could be either because they ignored the decision, so they got a decision that said their worker was inside, but they continued to pay the contractor gross. And if HMRC were then to come along and try and get the tax off the fee payer and they couldn't pay because they've either gone bankrupt, insolvent, or they've closed down and phoenixed, which can happen a lot with non-compliant payroll providers, then HMRC will just move to the next party up in the supply chain, which is the first agency, or ultimately up to the hirer to get the unpaid tax. So they've been very clear, if they can't collect the tax that's due, they're going to go up the supply chain. And if you can understand the fact that then the hirer has risk on for a number of different reasons, you can start to understand why lots of them are taking quite risk-averse approaches to IR35. So let's talk a little bit about that now and talk about some of the behaviours that I've seen back in 2017, but also I suppose in the dry run that we had in March of this year. We'll talk about hirers first. Very, very apparent that a lot of hirers are now choosing to not have PSEs in the supply chain. The banks sort of took the lead on this. So the likes of HSBC, Lloyds, RBS, some Royal London and insurance business took the decision, actually, this is complex. We've got risk for a variety of different reasons. So we're just going to sidestep this whole challenge, and we're going to mandate down that we no longer want any contractors engaged with us to be paid via personal service companies. I saw that repeated again in March, and I'm seeing it repeated again this year. Most hirers aren't keen for the reputational risk. They don't want a battle with HMRC on tax. So they're just simply saying we're no longer going to pay contractors through limited companies, and forcing contractors to make a decision around which umbrella company they might payroll through, or even talking to the recruiters and saying, actually, we want you guys to provide PAYE for these workers, which clearly is not something that most recruiters want to get involved in, hence why you have engagement with umbrella companies, for example. We've also seen a number of hirers wanting to get assurance on the quality of payroll providers in their supply chain. So a number of them now specifically naming named umbrella companies to be in that supply chain because they've done the due diligence and they want certainty that that umbrella company is financially secure, is deducting the right levels of tax, they've got a strong balance sheet, so there's no risk of this financial risk passing up the chain because they can't afford to pay the taxes that are due. I think another key piece around all this as well is the hirer is not only thinking about assessing workers from an IR35 perspective, but actually also, more importantly, looking at how business critical the contractor is, and making a decision that actually, if we're uncomfortable with the risks around this and we're going to look to reduce the number of PSEs being paid, then maybe we need to consider increasing rates of pay for contractors. So I talk about this being a kind of bucket list approach, where a hirer would look at the contractors that they have. Bucket one's kind of, we can't afford to lose these people, they're business critical. So perhaps the easiest thing to do is just look at a suitable rate increase for them. You've then got bucket two, which is, okay, we don't ideally want to lose this contractor, but our recruitment partners have suggested that they could replace them if needed. So maybe here what we'll do is a partial lift in rate, maybe just covering the employer's national insurance. And then you've got bucket three, which is either actually we're not, we can potentially afford to lose that contractor, or we just simply don't have any more funds available. So all the pain of all this additional tax that will now be due has to come out of an existing pay rate, and there's no rate increase for the contractor. But I think what is pretty apparent across the market is the hirers absolutely don't want the risk, and that seems to be what's driving the decision making. Not everybody, some are going out and looking at trying to do assessments and looking at the various tools that are available and exploring those options, but we, from our perspective, we see most of them taking a very risk averse approach. I think when you move away from the larger businesses and move to look at some of the SME marketplace, it's pretty surprising still that there's a number of the SMEs that have simply got no awareness around this legislation at all, and are actually waiting for recruitment businesses like yourself to educate them, because you guys will understand now, if they're a medium-sized business, there's some risk here for you as well, so they're sort of needing you guys to take the lead. And as an aside, at Giants, if you want some support in contractor or client webinars to explain these changes and educate your clients, then we're always more than happy to help. Just get in touch with your account manager and we can set that up. From a contractor perspective, well, you won't be surprised to know that a lot of them are shopping around for the best offering possible from payroll providers, which tends generally to be a focus on the best net take-home pay. But as we'll talk about later, the best net take-home pay is not always necessarily compliant, and there's some non-compliant schemes continually being pushed, none more so than now, that you need to be mindful of, because that's going to create some risk for you and your hirers if you start to get involved with them. The HMRC is tightening the noose, so to speak, on the non-compliant providers, but they're very slow and always have been. And there will be some airtime for those solutions to maybe catch some contractors, but they are now catching up with some schemes, and we've seen plenty of activity from them over the last 12 to 18 months, sending out backdated letters to contractors for unpaid taxes. Not great if you were the recruiter that kind of introduced them in the first place, either willingly or unwillingly. So I can't stress how important it is to make sure you've got a nice compliant payroll chain. They're very anxious to know what the status is going to be. So most of them probably still haven't yet been informed. I'm aware of a few businesses that are starting to do assessments now, but most are leaving it to Q1 of next year because, frankly, COVID's got to put a lot on their plate. But what is certainly apparent a lot of the time is a lot of the contractors are totally oblivious of the tax risks of them operating through a limited company. Now, they've perhaps been referred to a payroll business before that set them up in a limited company without any real explanation of the risks that they're undertaking. And they need educating basically as to why they may be best now to move from that model and start looking to get payroll through something like an umbrella arrangement. But most of them would prefer to have a couple of choices of different payroll options, so we'll talk about them shortly. You probably again won't be surprised to know that a number of them will be looking to try and get higher pay rates to compensate for this additional tax that's due to be paid. I think if I reflect back on March of this year when the announcement was made on the postponement until April of next year, you could hear the market breathing a sigh of relief and the contractors being delighted. But literally within the space of a couple of weeks, it became very clear of what the impact of COVID was going to be in actually reducing the number of assignments available in many sectors. And actually contractors are just very, very keen to remain on assignment. Now, clearly that's a different story for different sectors. You know, places like logistics are absolutely booming at the moment, and there's obviously high demand for those sorts of workers. So I wonder now in this sort of post-COVID economy that we're now in, whether or not contractors will push as hard to get rate increases. I think it'll be different for you guys depending on what sectors you operate in. For some of the higher paid guys, pensions is certainly a big focus for them. They're very keen if they're having to work for an umbrella style arrangement that they want to make sure they've got options to pay into a pension, so they can compliantly still get significant tax relief by working in that way. For recruiters, I think you're probably sat there trying to get decisions out of the hirers so that you understand what to do next. You'll be keen to understand what the decision is going to be, whether or not the client's going to take a sort of no PSE stance, or if they're going to make determinations, what are the results of that, because you've clearly got some work ahead in terms of new contracts and potential new assignments to be agreed. Most agencies certainly will insist on workers that are deemed inside to go through compliant umbrellas, or perhaps the PEO option, which we'll talk about later, which is agency payroll effectively, except it's still managed by the PEO business. Or there's another payroll model, the fee payer model, which is where someone like Giant could continue to pay the contractor through their limited company, but take all the taxes that are now due under IR35 and pay them off to HMRC. So there's a number of different options, but irrelevant as to which of those options you want to go through, recruiters will be wanting to check to make sure that these businesses are financially sound. They're not just started trading in the last 6 months, because if those businesses disappear, that's going to put an immediate tax risk and burden onto that recruiter and ultimately up to the hirer. So doing due diligence, checking payroll providers you've got in your supply chain is now more important than ever. So touching into a little bit more detail around payroll options available, if we start at the top with personal service companies, personal service companies may still well be used if the contract is deemed outside of IR35 and you're happy with that decision that's been made, then you may well choose to continue to pay them as such. I think it's seen a few examples where some hirers have pushed down decisions to say, we believe the workers are outside, when I look at it and think they're blatantly inside, and are really asking the agency to take some risk there. So agencies that are being forced to pay in that scenario are probably quite reliant on this reasonable care argument and hoping that if HMRC do come along, that the risk will actually move to the end hirer because they've not taken reasonable care in making the decisions. I think so that's outside working, but for those that are inside IR35, you can still pay them through to their own limited company. It's complex. You need to be sort of bringing in employment tax deductions into a invoice accounts payable operation. So a lot of software, payroll software can't handle that, but businesses like Giant, and there are other businesses that offer this fee payer model, can do provide this service where they basically jump into the supply chain, very much like with Umbrella. You pay them the previous outside IR35 rate. The Fee payer will then deduct that, pay that off to HMRC, and then pay the net that's left over to the person's business bank account. But when we do this at Giant, everything's on portals, so the client can see the remittances and sort of continue to share that with their accountants, do the tax returns. Because you should remember that IR35 is done on an assignment by assignment basis. So just because the assignment with you guys is deemed as inside, if you've got other work that's deemed outside, maybe the contractor wants to continue to work for their limited company. So that's an option to consider. I do think the bulk of the market is going to move towards umbrella companies. I mean, certainly for us, I'd say 70 to 80% of those that are affected by IR35, we're looking at moving through to work through the umbrella solution. I'm sure you're familiar with the concept of umbrella companies. That's where the worker becomes an employee of the umbrella company with full employment rights. So we're being taxed like employees, so perhaps they should be getting the same employment rights. The contract rate wouldn't change. You'd simply pay the existing contract rate over to the umbrella company, and then the umbrella company should be deducting employers' taxes like employers' national insurance. They'll deduct a margin. The amount that's then left over becomes the gross taxable pay for the worker, and on that amount they should be deducting PAYE, income tax, and employees NI, with the net being paid to the person's personal bank account. Umbrella contracts will offer continuous employment, so if the contractor is moving around working for different recruiters, it's portable. The contractor doesn't have to keep re-registering with different companies. And as I say, there's going to be a huge volume of workers moving to umbrella companies. And then the last option that I mentioned here, which I mentioned earlier, PEO, that stands for Professional Employment Organisation. Looks very similar to an umbrella arrangement, so the PEO business employs the worker. The only difference with it is how the rates are calculated and the presentation of that to the contractor. So if you remember back on the umbrella piece, I said that the existing assignment rate is received by the umbrella company deducts employers' taxes and its margin, and the bit that's then left over is the gross taxable pay for the worker. That's legally the contractor's money. So I don't know, in an example of, say, a contractor on £500 a day, after those deductions, let's say the bit that's left, the gross taxable for after employers' costs have been taken, is £420 a day. That is the real rate that that worker is on legally. They're not on £500 a day, they're on £420 a day. Or to do it on an hourly rate basis, if someone was getting paid £20 an hour before, going through an umbrella company, effectively their rate is probably more like £17 an hour. There's a lot of confusion in the market around these rates and the real rate that a worker's on. There's a lot of criticism of umbrella companies, and we've had key information documents introduced this year to try and clarify matters. What the PEO does is cut through all that noise. Basically, the agency should tell the worker the real rate of pay they're on from the beginning. So tell them they're on £420 a day or £17 an hour. That's what appears on the PEO wage slip. So it's the normal wage slip like we would all see as employees of our businesses. And then separately, once that payroll's run, an invoice is then raised by the PEO business for the £17 plus those employers' costs. So employers' national insurance, the margin, pensions, and all the rest of it. Because it's on a separate invoice, those employers' costs, it doesn't have to be shown on the wage slip, and it doesn't have to be shown in a KID document, because that's a separate commercial arrangement between the recruiter and the PEO business. So I don't for 1 minute think that PEO is going to overtake the world immediately, although it's been talked about a lot more. We've seen different iterations of it coming out now, like dual employment and co-employment models, which frankly make me a bit nervous, and I'm not so sure that they'll stand up when HMRC starts to get a grip on them. But I certainly do think over time that this PEO model will probably become dominant over the umbrella, because it's just a lot more simple and straightforward. Tell the worker the real rate of pay that they're on. That's what they see on the wage slip, and that's what they get paid. And perhaps we'll see a reduction in the amount of umbrella usage, but probably going to be a couple of years for that journey to take place. So I've mentioned a few times non-compliant providers. I think one of the sad things about these off-payroll working changes in the public sector and the private sector is it's added a lot of steam back into this non-compliant world of payroll. With a lot of new schemes sort of morphing up and trying to catch often low-paid, vulnerable contractors, in my opinion, sort of people that shouldn't be anywhere near contrived payroll arrangements. I'll split the sector simply into the good, the bad and the ugly. I think that for the good is those that take payroll people compliantly. The only difference in net take home between those providers should be the margin that the umbrella company charges. Take home pays will vary, but roughly speaking, 60–65% dependent on the contractor's tax rate. The bad ones are those that try and ignore some rules around expenses. So there's rules in place now where contractors shouldn't claim expenses if they're under the supervision, direction and control of a hirer. So generally speaking, if they're caught by IR35, they're probably under control and therefore they shouldn't be claiming expenses, but some umbrellas ignore that, take it at their risk and allow that to go through, which increases the take-home pay of the worker up to about 75%. And then you have the sort of ugly schemes, the real bad ones that are just blatant tax avoidance, where they're looking at dressing up part of the income that's paid to the worker as something other than salary, so it doesn't have any tax on it. I've seen loads of ways that can be done. Often they involve loan schemes, they're getting paid through offshore arrangements. I've seen some contrived arrangements where, believe it or not, the payroll provider purports to pay people in gold bullion, anything other than pay them a salary, which has to attribute tax on it. It's a headline grabber and the contractors will go for it because the net pay can be up at sort of 85–95% territory. But unfortunately, HMRC can go back 5 years and there's lots and lots of stories now in the press on Contractor UK, BBC, around contractors that are being caught now in these arrangements. The scheme providers have long gone, and unfortunately HMRC can go back up to 6 years. People are using the houses, there's been suicides, a real mess out there. And I think it's really porous, particularly when you've got the likes of nurses and low paid sort of key workers getting pulled into this sort of stuff. It's pretty unsavoury. So you need to make sure you're avoiding these sorts of providers. That's huge reputational damage, I believe, for both you and also potentially the client if these schemes are used in your model. So please do your due diligence and make sure if you're going to put together a list of payroll providers that you pick those that are compliant. I think last slide from me, I thought it'd be useful to high level run through some of the things you should consider for an operational plan around IR35. So I think firstly some training, which is great that you're on the call with me today. I'm happy to look at a Q&A at the back end of this, but certainly training inside your business, making sure that the consultants are comfortable with the nature of these changes. Making sure you're explaining that to your staff, and again, if you want Giant to help with webinars for your staff to do some of the training at maybe a more basic level than we've gone through today, then I'm and your account managers are happy to support. You then need to be engaging with your client if you're not already doing so. How are they going to look at assessments and how are they approaching it? How are they going to communicate this SDS statement down to you? What they're going to send it by email? How are they going to do it? It's really important you've got it. If they are, looking at making assessments, if you look at box 3 there, then how are they going to make those assessments? Are they using HMRC's much criticised check employment status tool, or are they using an independent assessment service? Are they looking at trying to get in some insurance-backed services? We know there are schemes out there or tools out there that will also offer insurances, which I think has got some value. I can understand why some contractors would want to pay for that, and perhaps some clients as well. But I heard a real good analogy about it a few weeks ago, which is we all have car insurance, but we don't drive around at 100 miles an hour. So if someone's going to take IR35 assessment insurance, that does not negate the client's responsibility for doing accurate assessments in the first place. And it shouldn't encourage them to be giving outside decisions, because I'm pretty certain HMRC will be looking at trying to challenge these insurances quickly to see if they stand up. Frankly, if someone's doing an assessment accurately, there should be no need for insurances. So that's my views and one to bear in mind. Looking at box 4, you've got the decisions now. How are you going to communicate that to the contractors? How are you going to manage any appeals process? How are the hirer going to manage those appeals? Make sure that you're not falling foul of that new process. But for those that are deemed inside, once they've exhausted their appeal, moving on to box 5, then you're really into the nitty-gritty of rate negotiations. So is the client going to increase rates? If so, then you're going to need to think about when you're ending existing assignments and starting new ones. contractors are going to want that to be as close as possible to the 6th of April, but you need to make sure practically you can get through the body of work. Depends on how many contractors you've got. If they're electing to go through an umbrella company, then you need to make sure you know who that umbrella company is. So we've seen a lot of agencies reducing the PSL down now, so they've only got 2 or 3 payroll providers to make that process a lot easier. I think the days of paying through any provider that a contractor wants are numbered, particularly around this debt transfer piece that I've been painting out today. And then lastly, number 6, important to bear in mind, if the hirer is doing assessments, that's an ongoing process. So they may do assessments now on people on existing contracts, but as new assignments are brought on, they should be assessing those roles and they should be doing a review of that every 6 months. So there should be some form of communication on how the client is going to update you on that ongoing process. And I think if you can address all those boxes, you'll be in a real strong position on your IR35 plan for next year. So that's the end of my slide deck. If I stop sharing now, more than happy to take any questions that you guys may have, any particular parts of that that you feel you want to go back over, or if you've had any particular questions come through from your clients. If you've got any questions, feel free to jump on the Q&A or the chat button now and shout out, or raise your hand as Holly said, and we're happy to add you into the call. Here we go. We've got a first question come through, which is great. Can I insist my contractors use a compliant payroll provider, or do I need to give them choice? Well, I think the answer to that is it's your business, so it's entirely up to you. If you wish to insist, then of course you can. Clearly, if contractors have got a desire to work through non-compliant solutions, then you've got a decision to make whether or not you're prepared to take that risk that I've pointed out today, or if you feel that the risk's worth taking because you believe that you have to, otherwise you can't compete. So I'm well aware that in certain sectors, the use of non-compliant payroll partners is rife, and there's always a fear that, well, if we payroll the right way, the workers won't join. I really do see that as a sort of house of cards approach, which will come tumbling down at some point. But ultimately, you guys are all in business yourself. You're all taking risks on a daily basis, so it's for you to make that decision. Clearly, we will advocate you should operate compliantly. If you're looking at trying to grow the business to sell, then absolutely it will reduce the value of your business if you've not got good supply chain compliance. It's one of the first things that someone looks at when they're looking at acquiring a recruitment business, is who are the suppliers involved. And if you've got some nasties in there, then that could potentially jeopardize a sale. So that's another consideration. But ultimately, it's your choice. Those models are out there. You could elect to use them. Contractors may well be attracted to it. But it's as long as you know the risks and you're wanting to take them, that's entirely a business decision for you guys. Cool. Okay. Well, no other questions coming through for now. So happy to wrap up. I will stay on the call for another sort of 30 seconds or so if there's any other questions coming through. I'm sure Holly will be sharing the slide deck around with all of you. Thanks so much for spending your time this afternoon hearing what I had to say. If you do have any other questions you want to ask, feel free to raise them directly with your account managers at GF Plus. And if we can support in any way, whether that's client facing, contractor facing webinars, we're booking those in now for our agency partners, and we'd be delighted to support you guys as well. Have a great rest of the day and enjoy your Christmases. Thanks, everybody.